I have been trading non-stop for about 2 years and I have not been able to pass an evaluation phase with a prop firm challenge. How were you able to overcome this obstacle? Now, this is actually a question I received recently in my comment section, and this video I'm going to address it. If you think you'll find this useful, you know what to do. Support the channel, hit the like button, hit the subscribe button, and I keep on getting videos like this out to you guys. Let's get busy. Okay, so what I'm going to do is show you the steps that I would take when I approach a prop firm challenge, okay? But first, before we do that, let's have a look at the comment. So the comment was sent in to me by Expat Trader FX, and it reads, "Hey Patrick, I've been at this trading journey for 2 years straight hardcore and have months of great demo success, but I can't pass a damn evaluation to save my life. It's making me hate myself at this point. What has helped you overcome this hurdle?" Okay, so first things first, thank you for your comment. Thank you for inspiring this video. Anyone else, if you have comments or questions, please send them in. I have no problem in addressing them or go into detail in a video if I need to. So what I'm going to do now is show you the steps I would take for making that switch from demo to a prop firm before I start trading. Okay, so here on the 5%ers website, this is 5%ers. This is a prop firm that I tend to use when I trade these challenge accounts. And what we're going to do is go through quickly what the options are. We've got the funded programs here. We've got bootcamp. This is ideal for someone who just started trading. It has a 3-step evaluation. You've got high stakes. Again, someone who's wants to move on with the trading, and it's got a 2-step evaluation. And you got the hyper growth one, which is a live account. Essentially, there is a valuation process, but you do get payouts straight away once you pass that.
Yeah, boy.
So we're gonna go to the hyper growth one, and we're gonna look at what the objectives are. So it varies from different companies, but it's more or less the same thing. Most of them tend to ask you for a 10% profit target to pass the valuation, okay? So 5%ers has a 10K, 20K and 40K account, but you start with the valuation funds of 5K, 10K and 20K. So we're going to look at this 40K account with the 20K evaluation process. So our objective is to hit the 10% without being stopped out. We've got a maximum stop out of 6%. So if you go over this from your starting balance, you lose your account. Okay, and then you have a daily pause of 3%. So anytime you exceed 3% in loss per any given day, they pause your account and you could then start trading in 24 hours. So this is actually put in place to help you calm down, relax, address your emotions, and then start trading again. So this is very useful. I do like that about 5%ers. One of the reasons I've used them. In the past, there was a lot more rules than this, and it's actually what helped me develop a lot of my discipline and the way I trade because of 5%ers. Okay, so that's our objectives, and there's a growth plan, and we'll get to that later on in the video. Okay, so now that I know what my objectives are, what I'll do next is actually to backtest, because I want to see what strategy I am going to take to try to reach those objectives. So I'll jump on the charts, okay? So if you've been following the channel, well done, you do know my setup. I like to trade intraday reversals. So I'll give you a quick example here. There's one going on here. So we have price trending up, pushing up, comes up to the demand. It fakes like it goes up here, pulls down, turns around, breaks structure by breaking this low here. So from that high where it turned around, it's that peak. From that low where it broke structure, that is my trend, okay? So that's my reversal, sorry. So I'm looking for this every single time. So I look at it. This is from backtesting. I found this setup. It is quite unique to me. I'm sure there's other people trading it in a different way with different terminology, but I learned this from reading price action, okay? So, and also I trade it quite unique to me as well. So you need to figure out whatever works for you. Have a look, search the internet, figure out find things that claim to be profitable, then backtest it yourself and see if it works. Tweak it if you like it. If it's giving you like a 60% return, not good enough for you, tweak it. Let's see if you could get a little bit more and so on. And that's what I did. So If you need more examples of this, have a look on my channel. Tons of examples, live trades, and I go through the breaker structure and everything on my channel. But let's keep this brief. Okay, so let's see. We've got the reverser here, and I'm scalping it for 10 pips. Boom, there's 20 pips, no problem. So I keep on going on. So again, I want the peaks. I don't want these equal highs or equal lows. I want the peaks. So here again, so pushes out, comes in, fixed heads, continue, break structure. So that's my setup again. So what I did, okay, so that was the question, how I overcame this obstacle. What I did was went back looking for my trade day after day on different charts, marking it up like this, and try to figure out, okay, when do I get into the trade? Where do I leave my stop loss? How much can I expect from the trade, and so on. So if you zoom out, let's go to a high time frame quickly. You can see we've got this here, we've got one here, there's a trade there, there's a trade there, there's a trade there, there's a trade there, there's one in the Asian session there, there's a trade there, there's a trade there. So I saw the opportunity was there, and I saw it gives me 10 pips easily. It gives me 15, 20 pips at in most days. But I back tested it, and I've seen occasions where, for instance here, it doesn't give me the whole move. It will give me a piece of the move, right? So I then structured the way I trade to take this into account. So I can make one trade a day and be able to now catch these moves regardless, right? So backtesting is very important. It gives you confidence, it gives you data. You need to have data at this point. You need to know what works. And that gives you confidence when you are trading. So when the emotions creep in, which is what's missing from demo, when the emotion creeps in, you can rely on that data that you tested. It's like, no, I've tested this, I know this works. Let me just take the trade. That's the setup I've been waiting for. Let me just take the trade. So it's very important to build confidence by backtesting. So that would be the next step. Okay, so the next step I will take is actually to create a trading plan. So I've done this quickly to illustrate and show you what a trading plan could look like. I just put some of the information that's relevant. We need to know what the account size is. We need to know what our objectives are. So if you remember, we're looking at 10% on the 20K account, so $2,000. We have a 6% stop out, so $1,200, and a 3% daily pause, which is $600. So I need to have that in mind. I then look at my risk management. So based on my back testing, I know now that to be able to take certain moves, I need to have a 2-to-1 risk to reward, okay? You may back test and you find a 1-to-2 works for you. You may back test and find a 1-to-3 works for you, whatever works for you. So for me to be able to get my 10 pips on a consistent basis, and when my trades at 80%, I know I need to have my 2-to-1, because that keeps me in the move without the manipulation that happens, price taking me out, then going my direction. This is all data I collected, and this is why I'm happy to risk 2 to try and get 1, because I know in most cases I'm gonna win, right? So that's why the data is really important to help you structure a trading plan, help you structure your risk management. So now a 2-to-1, what that looks like means I'm happy to risk 20 pips to try again 10 pips. That means if I do that, I'm gonna win more trades at 80%. So I'm very happy about that, and I keep moving. So then I need to figure out how much money I'm willing to risk per trade. So I've got a maximum stop out of 6%. I've got 80% win rate. I'm happy to risk 1% per trade. This is quite aggressive. If you are struggling, if you are new, I would even risk this. I think when I started, I was risking like 0.3% per trade, and I was trying to do a 1-to-1 or 1-to-2. So figure out, again, from backtesting, get your data, what works for you, how to manage your risk. The things you have to understand is you're going to take losses. So in my case, I only take about 20% loss, so I can afford to risk 1%. But if you've got a strategy where you're taking maybe 40% losses, you can't risk 1% per trade if you've got just 6% maximum stop out. You need to reduce it, so maybe a 0.5%, okay? So in my case here, I'm risking 1% and I'm trying to make 0.5% per trade. So if I get my 10 pips, that's 0.5%. So then that 0.5 is the equivalent of $100. $100 times 20 trading days, if I were taking one trade per day, will give me my profit target, right? But I also need to take into account my 20% loss, which is $400. So in 20 trading days, I'll get $1,600 roughly. So I need an additional 4 trading days to reach the profit target. So this is all a part of my trading plan. So I understand mentally how long I need to trade for, and I need to prepare myself for that. And I think it's important for us to not have unrealistic expectations that we are going to be able to hit a profit target of 10% within 2 or 3 days. A lot of people have attempted that, including myself. I have been able to do it in 1 or 2 days actually, but it's not consistent basis where I am able to trade that way without emotions and grow larger accounts. When you get those larger numbers and you're trading so aggressively, your emotions take over. So what I've started to do is move away from that. So I'm trying to find a system where I could grow my account slowly and go for the long run, okay? Okay, so the next step would be actually to take the trades. And this is what most people struggle with. Not because it's hard, because it's very easy to press a button, but it's harder because we need to now control our emotions through the process. I said, this is gonna take me 24 days. Can I be disciplined for 24 days? And in most cases, the answer is no. We are going to struggle, and it's because we are not used to working under so much pressure where it's money that we put on the line. It's not like a 9 to 5 where you turn up and do the job and get paid at the end of the month. This is actually your own money, and the emotions that kick in is something that we're not used to, and this is why 95% of traders fail. Now, how I was able to overcome this obstacle was to focus on things outside of trading. So I started this YouTube channel, I picked up new hobbies, I started thinking about discipline, how I could discipline my mind. And the best way for me to discipline my mind is actually to discipline my body. So I started going back to the gym, I started boxing more.
Oh shit, what is that?
I started to focus on things outside of trading that kept me healthy, kept me active, kept me creative, and I tried to take the discipline and that relaxed sense and bring it back into trading, and that's helped me. And I had to also take breaks. So this is something that a lot of people don't do, and I would recommend if you are struggling, you've gone through the whole process of backtesting and you still can't get the results, it's because your emotions are just overwhelming you and you need to find a way to deal with that. So the best thing you could do is actually to take a break, find something outside of trading, focus on that, then come back into trading nice and relaxed with a disciplined mindset, and then take the steps that you have backtested to win your trades, and just take trades per day with a smaller amount of capital to allow you to control your emotions. And once you get to a stage where you could then increase the amount of leverage you use, and that will help you actually get to your profit target a lot quicker. And the last point I'd like to make is the importance of being patient, okay? You need to be patient to grow the account. You need to be patient for your trade setup. You need to be patient for the TP. You need to practice this. This is another thing that most traders are missing. So, and it's very difficult to be patient when you have so much information, YouTube gurus showing you the lifestyle they live, which possibly isn't from actually trading.
Stop the cap.
You see all this and you believe that this is how trading works, this is how you grow your account, I need to flip it as quick as possible so I can live that lifestyle. It's not how it works, it's how you blow up your account. That's why 95% of traders fail. You need to be patient. You see, with the growth plan, you can actually afford to be patient. So if you add all this up, it means it will take me about 6 or 7 months to make about $100,000. I can't think of any profession off the top of my head where I can make that kind of money in such a short period of time. This is what I want you guys to take away from this video. This is possibly what's missing from your trading. It's important to be patient, it's important to be disciplined, it's important to backtest, it's important to have a trading plan. You need to put it all together to be a successful trader. I have now gone through the steps that I have taken in the past to pass evaluation stages on a prop firm challenge. Hopefully this has been useful, and if it has, you know what to do. Support the channel by hitting the like button, hitting the subscribe button, and if you have any more questions, let me know in the comment section and I'll get back to you as soon as I can. This is Patrick signing out, and until next time, Merry Christmas, Happy New Year, and I'll see you guys in 2025. Peace.